There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.
Hi everyone, today we're going to talk about odd lots and fractional shares. Odd lots are usually the people who have less capital to invest, and they tend to wait until the bull market is nearing an end of its bull market cycle. Bull markets tend to last 8 to 10 years on average. Sometimes they're shorter, sometimes they have been a little bit longer, like 11 years. But they don't last 15 or 20 years. So if a bull market is 8 or 10 years old, it's near the end of its bull cycle. There are always bull markets, and then they're followed by bear markets because of speculation and because of people buying stocks way above their fundamental value. And this has been occurring recently. When you have a speculative market, everyone gets excited, and the people who know nothing about the market and have very little capital to invest get all excited because they think that the stock market is just beginning a bull cycle. They don't know anything about stock charts, they don't know anything about the market, and so they listen to the news, which is full of hype and scams and all kinds of things that are not true. And the financial side of the market, the professionals are always trying to sell their products. Stockbrokers are salespeople. Financial planners are salespeople. Even certified financial planners. Your local neighborhood broker is a sales force trying to sell you a product. That is called an index fund or a mutual fund or an ETF. They are in the business of selling you something so they can make money. Now, the odd lotters ran out of money, and there's a group of new investors who are younger who love their smartphones. And there's these retail brokers who've come on with apps. Robinhood and all kinds of them. There's about 20 of them right now, as best as we can count, that are all sending out apps that you can buy stocks online through your smartphone. And this just sounds fantastic. All you have to do is sit there and you're waiting for the train, or you're sitting in traffic, or you're bored at your desk at work, and you can just go into your phone and you can buy a stock. Is that a smart idea? No, that's a dumb idea, because you don't know anything about the company. You may have heard of the company, you may have bought their products or services, but that doesn't mean that it's a good time to buy that stock. Then all of a sudden these brokers decided to offer fractional shares. What a fractional share is that it used to be that you could buy 1 share of stock, which was an odd lot. 100 shares is a regular or standard lot that you would buy. So most people buy 100 shares of a stock when they buy stocks. Sometimes they buy as much as 1,000 shares. That's the normal average. But right now, stock prices are so high and so expensive, so these brokers decided to offer fractions of a share. So it's 1 share that is divided by as many times as necessary. So maybe you buy $10 worth of Amazons, which is an infinitesimally small amount of 1 share of any company, whether it's Boeing or whether it's Bank of America or JP Morgan, whether it's Coca-Cola, it doesn't matter. When you just spend a few dollars to buy a fractional share, you have really nothing. You've spent your money. You don't know whether that fraction of a stock is actually going to increase in value or not. And you are buying this directly from your broker. And this is not a good idea. The broker is in the business of not helping you, but making money for the brokerage. Their goal is to make as much money off of the retail crowd as possible. They do not care if you lose money. They're selling you a product. They're selling you something so that they can make a profit. So like anything that you buy, whether it's a gallon of milk or a pint of milk, a case of beer or one can of beer, you have to know the value of what you're buying. So like a 24-pack of beer, if you buy one fraction of a share of a stock, you're buying one can. And you don't know whether that's actually going to make you any money or not. Cycles are beyond the control of governments or individuals or corporations or tax cuts or interest rate cuts. It's way beyond that. It's business cycles. All businesses cycle. Businesses have growth and expansion, and then they have a contraction phase. And this is just how business is. There has never been a business in the history of the stock market that has continued to go up indefinitely without any corrections or bear cycles. Not a single one. And most people who buy odd lots or fractional lots are buying at the end of a cycle, business cycle for that company. And so what they buy is going to go down in value. As an example, Microsoft in 2000 got listed on the Dow. It also split. And everybody rushed to buy Microsoft at that point. I know a lot of people who did. A lot of people who put all of their hard-earned money, whether it was $500 or $1,000 or $3,000 or whatever, into Microsoft, just sure that it was going to go on forever and ever and ever and go up and up and up, because it had been going up for about 10 years. And then it crashed. And it dropped below 50% of its value. And it waffled around there for 13 years. It never recovered that value until almost 14 years later. So everybody who bought it in 2000 at its all-time high had a loss in the Microsoft stock for 13 years. That is not a good investment. That's a very bad investment. That's buying high, and a lot of people gave up and sold it, and selling low. You're supposed to buy low and sell high. If you're investing in fractional shares because you have a little bit of money and you want to play around with the stock market, it's not a game, and you're going to lose your money. Maybe this is a lesson that you need to learn. Maybe you need to learn this lesson the hard way, but that's really unfortunate because some of you may not have a lot of money to lose. If you think you're going to get rich quick buying fractional shares of a big stock, any big name stock, whether it's Google, Amazon, Facebook, Apple, Netflix, whatever, stocks at all-time highs in a 10-year stock market cycle is the riskiest investment of all, because the market has to correct and bring the values of the stocks back down to earth at some point to the fundamental values. Now, I'm on Quora and I answer a lot of questions, and you're welcome to ask me any question that you want, and I will try to answer it. One of the questions I got just recently was, when the market crashes, what happens to all that money? Say the Dow crashes. Don't know if it will or not. Have no idea. Don't really care whether it does or doesn't, because I know it's going to come down. The higher it goes, the deeper the crash will be. That's historical, empirical evidence. So what happens to all the money when the stocks go down? What happens to all that money? Well, here's the reality of it. If you have a fractional share or an odd lot and you have a few shares, and you bought that at, let's say, $20, and you bought so many fractions of a share, so maybe you have $2,000 invested, and that stock drops 50%. Now you have a loss of $1,000. Well, what happened to the $1,000 that you thought that you had made money on? It never existed in reality. It's called unrealized gains. If your stock goes up in price and you invest like $1,000 and it goes up $2,000 in value, and you think, oh, I've made $1,000 in profits, you haven't made anything. until you sell the stock. It's called unrealized gains. In order to have a realized gains, you have to sell the stock. So if you have $1,000 invested in a stock and it goes up to $2,000 in value, if you hold it and it drops in price, nobody gets that money. It's simply gone because it's only on paper. Stocks fall, and when they fall and lose their value, no one wants to buy them, so they drop more. And because the stock prices are falling, nobody wants to buy the stocks. So the stocks drop further because there are no buyers. The more sellers that go in and start selling, and the fewer buyers, the faster the stock will fall. The faster the stock market falls. It takes 8 to 10 years for a bull market to reach its full growth and end. But it only takes a few months to a year and a half on average for a bear cycle to go from the first collapse down to the bottom where it starts to end. But it can lose 50 to 80% on individual stocks. In our last correction that we had in 2018 in December, a whole lot of stocks lost somewhere between 20 and 50%. So if you buy one share of a company and you spend $50 and it goes up to $100 and then it falls back down to $20, you have not only lost the unrealized profit of $50, you've also lost $30 of your capital. So now all you have is $20 in a stock that may go down further and further. It happens all the time. How can you avoid this? Well, you have to be more clever than the people who are wanting to sell you something that is overpriced and is going to go down. They want to make money on it. They want to sell it at a high price and take their profit and walk away and leave you with a stock that's going to crash and burn. There is no sentiment or sympathy for the retail crowd on the professional side. They think of the retail crowd as uneducated, incapable of learning to trade the stock market or invest wisely. They think you have to have somebody telling you what to do and what to invest, and nobody cares. Your broker doesn't care. Your planners don't care. They're selling a product. It's just like somebody selling you a case of beer or a car or whatever. It's just a product to them, and they make money on it. Financial planners and stockbrokers are told what to sell. They're given a list of stocks or index funds or mutual funds or ETFs, and they're told, go sell this to your clients. These are the selling points that you will tell them. You will tell them these selling points. You will sell this product for us. This is what the company tells them to do. And that's what they do. They are salespeople. All of them are salespeople. They may seem sincere. They may seem earnest. When somebody's trying to sell you a car, they're telling you it's the greatest car ever. But they're not telling you that this car has some other problems or something else. They won't tell you that. And a lot of times they don't know. Salespeople often don't know much about the products they're selling. A stockbroker often has no technical analysis experience or knowledge. I know because I teach them all the time. So they have no idea what's going on with the stock. They've just been given this list of stocks that their company wants them to sell, and they get on the phone or they're at their desk and you come in walking through the neighborhood brokerage company and you sit down and say, I want to buy some stocks, and they pull out their list and say, here, these are the stocks you should buy. These are great stocks. They're just selling you product. The same thing happens with that app on your phone. They're just selling you a product. They have no idea who you are. They don't know what your capital is, and even if they do, it doesn't matter to them. They're just selling you a product. They're not your friend. They're salespeople, and they're doing their job. You shouldn't hate them for it. That's their job. Salespeople sell products. That's what they do. If you're into fractional shares, you had better learn technical analysis to find out if you've bought a stock that's going to crash and burn and you're going to lose every penny you invested, because you can, or if it's going to bottom and go up, or what's going to happen with it. Because right now you have no idea what's going on with that stock. You just bought it as an impulse buy, like you might stop by Starbucks and buy a cup of coffee. And that's not what you do when you're investing in stocks or trading stocks. If you want to be successful in the market, you have to understand what is going on, how to trade, how to invest, what you need to look at, stock charts, technical analysis, and other things. It's a whole lot of fun to learn about this stuff, and if you do, you can make money in the stock market. But the stock market isn't a casino. It's not gambling. So don't treat it with that much disrespect. It is the business of businesses. It is the corporations that employ people. And those corporations support the small businesses that employ even more people than the big corporations. It's what makes our economy run. It's what makes it possible for you to go to college or buy a home or have a job or start a business or buy a new car or finance your daughter's wedding. It matters. The stock market is very important. It needs to be treated with respect. It's not a casino. It's not a game. There are plenty of places for you to go play games. There's plenty of places for you to go to casinos and gamble. The stock market is not that. The stock market is the business of businesses. Come check out our website at technitrader.courses. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.